Imagine the crypto market as a vast, unpredictable ocean, its surface calm one moment, then suddenly roiled by unseen forces beneath. Every day, countless traders and investors navigate these waters, hoping to catch the next big wave. But sometimes, something truly extraordinary happens that sends ripples across the entire sea. Today we felt a seismic tremor, a jolt that caught even seasoned market watchers off guard. A massive SHIB whale wallet, which had been silent for months, maybe even years, has suddenly sprung to life, sending shockwaves through the crypto community. This isn't just any wallet, it holds a staggering 370 billion SHIB tokens, an amount that could move markets with a single transaction. The crypto world is abuzz with speculation, and here at Crypto Insider, we're diving deep to decode what this sudden awakening could mean for SHIB and its holders. Picture a sleeping dragon, curled atop a mountain of gold. Now, it's stirred, and coins are tumbling down the slopes. The awakening of such a giant is never a small event. One whale's move has sent shockwaves through the market, causing prices to fluctuate and traders to scramble for answers. Why now? That's the question on everyone's mind. What could have prompted this whale to break its silence after so long? Most of us dream of owning millions of SHIB, fantasizing about life-changing gains and financial freedom, but 370 billion is a different league entirely. A sum that could influence the fate of the entire SHIB ecosystem. This wallet's activity is more than just numbers on a screen. It's a signal, a message to the entire ecosystem that something big might be brewing. Is this a show of confidence in SHIB's future? A sign that the whale believes in the project's long-term potential? Or is it a prelude to a massive sale? A move that could flood the market and send prices tumbling? Or perhaps it's something else entirely, a strategic play, a partnership, or a signal to other whales. The motives behind such moves are often shrouded in mystery, leaving the community to speculate and theorize. Whales like this can sway markets in ways retail investors can't, their actions casting long shadows over the trading landscape. Their moves are watched with awe, fear, and curiosity. Every transaction dissected for clues about what might come next. As we unpack this event, we'll look at technical charts, community reactions, and try to separate fact from rumor. We'll also explore the broader SHIB context, how this event fits into the larger narrative of the token's journey and its place in the crypto universe. The sleeping giant has stirred, and the crypto world is holding its breath, waiting to see what happens next. So, what could this mean for SHIB's future? Let's break it down, analyze the possibilities, and see where this whale's wake-up call might lead us next. Here's what happened. A crypto whale, someone with a massive amount of digital assets, just transferred 370 billion SHIB tokens to a major exchange. That's a staggering sum, worth millions of dollars, and it immediately caught the attention of traders and analysts across the globe. Moves like this don't happen every day, and they often spark intense speculation about what might come next. In the world of crypto, moving such a large amount of tokens to an exchange is usually seen as a signal that the owner could be preparing to sell. This is because exchanges are where most large-scale trades take place, and whales rarely move their holdings without a reason. This kind of transfer creates what's known as selling pressure. Imagine a farmer suddenly flooding the market with a huge harvest of apples. If there aren't enough buyers, prices will likely fall. The same principle applies here. If too many tokens hit the market at once, SHIB's price could drop unless there's enough demand to absorb the supply. However, it's important to remember that a deposit doesn't always mean an immediate sale. Sometimes, whales move tokens for reasons other than selling. The whale could be diversifying their portfolio, preparing to stake their tokens for rewards, or simply repositioning assets for future opportunities. There are many strategies at play in the crypto world, and not all of them are bearish. Without a direct statement from the whale, we're left to interpret the clues and piece together their intentions from the available data. Analysts pore over blockchain records, news headlines, and market trends searching for hints. Is this move a sign of bearish sentiment, or is it a calculated strategic play? The uncertainty keeps everyone on edge. This ambiguity is what keeps the market guessing, fueling debates and discussions among traders, investors, and enthusiasts alike. All we can do is analyze the context, watch the charts for sudden moves, and listen to the ongoing chatter within the crypto community. Every detail could be a clue. The whale's move is a powerful statement, sending ripples through the market, but its true meaning remains open to debate and interpretation. For now, the market waits and watches, alert for the next big move that could shift the tides for SHIB and the broader crypto landscape. Adding to the drama in the world of SHIB is a technical pattern that often grabs headlines and stirs up emotions among traders, the infamous death cross. This ominous-sounding term refers to a specific event on the price chart that many investors watch closely, especially during periods of uncertainty or heightened volatility. The death cross occurs when the 50-day moving average, which tracks the recent price trend, drops below the 200-day moving average, which reflects the longer-term trend. This crossover is widely recognized as a classic bearish signal, suggesting that downward momentum could be building. To put it simply, imagine a runner whose recent pace has slowed so much that it's now lagging behind their long-term average speed. It's a sign that the energy and enthusiasm that once propelled the price forward may be fading. The death cross suggests that momentum is not just slowing, but potentially reversing. For many traders, it's a signal to be cautious, as it can indicate a shift in market sentiment from optimism to fear. When you combine this technical warning with the recent move by a major SHIB whale, it creates a double whammy for market sentiment. Large holders selling can amplify the impact of bearish signals, making traders even more nervous. But it's important to remember that technical analysis, while useful, isn't a crystal ball. It can't predict the future with certainty, and markets often behave in unexpected ways. The death cross is what's known as a lagging indicator. It tells us what has already happened, not necessarily what's about to happen next. It's a reflection of past price action, not a prophecy. In fact, history shows that markets can and do reverse course even after a death cross appears. Sometimes, these signals are followed by surprising rallies or quick recoveries. For SHIB holders, the death cross should be seen as a warning to brace for potential volatility, not as a guarantee of disaster. It's a cue to stay vigilant and manage risk, rather than to panic. Remember, the chart tells only one part of the story. Fundamentals, like project development, community strength, and broader market trends, matter just as much, if not more. So, stay alert, keep your emotions in check, and don't let fear drive your decisions. Being informed and prepared is always better than reacting impulsively. The real story of SHIB and its future is still unfolding. So keep watching, stay curious, and remember that in crypto, anything can happen. As if things weren't turbulent enough, K9 Finance, a key project on Shibarium, just shut down. This liquid staking platform's closure hit confidence in the SHIB ecosystem. The reason? Insurmountable challenges, leaving the community guessing. The 9 token crashed, and bearish sentiment grew. Still, SHIB's developers stress that Shibarium remains strong and resilient. The shutdown is a test, but not the end. Uncertainty breeds opportunity for scammers. With whale moves and project shutdowns, SHIB investors face a surge in fraud attempts. Fake support agents, phishing sites, and bogus airdrops are everywhere. The community's response: heightened vigilance. Never share your private keys. Verify all information. The SHIB army acts like a neighborhood watch, warning each other and sharing best practices. In crypto, your security is your responsibility. These moments teach newcomers the importance of skepticism. For veterans, it's a reminder to stay sharp and help others. Market stress can strengthen the community's resolve. This isn't SHIB's first whale-induced roller coaster. History shows whale moves can spark panic or surprise. Sometimes big transfers precede sell-offs. Other times, they're for donations or internal shuffling. The lesson: don't jump to conclusions. The real impact often takes days or weeks to unfold. Watch what happens after the deposit. Does the whale sell, split funds, or just sit tight? Patience and perspective are key. The first tremor isn't always the main quake. Learn from the past to navigate the present. Despite bearish signals, the SHIB army remains resilient. The community's strength is SHIB's greatest asset. While traders focus on charts, developers push forward. Privacy upgrades, AI integration, and more are on the roadmap. These fundamentals offer hope beyond short-term price swings. SHIB's story is one of volatility and vision. Will the whale sell, or will the community's resolve prevail? The answer is still unwritten. Crypto is a story told in real time. The SHIB army will debate, adapt, and help write the next chapter. What do you think this whale's move means for SHIB's future?